Welcome back, guys, to another episode of In Depth. I'm Keren Margolis. I'm here with our CEO at Sasco Digital Assets, Omar Sabek. In today's video, we are going in depth on Bitcoin's monetary policy. So we got into it a little bit in the video, and I want to be really clear on our position, which is that we're not bashing central banking. We're making comparisons between Bitcoin and central banks. So what use is central banking? What problem does it solve? And why do we still need it?
Very good question. So we have to hearken all the way back to 1908.
That is a lot of hearkening.
That's a long time ago. And in 1908, what was the environment, right? The environment was, there was no central bank. You had individuals that were making decisions on which banks to trust.
I hate that.
They had to figure it out for themselves, because you had every banking institution was their own sole entity responsible for securing funds, making decisions on, how much to lend based on the deposits that they had. And a lot of banks didn't really, do a good job of that. And it caused a lot of instability in the economy because people there were a lot of bank runs, and because banks were failing. And so it was a real loss of faith in banking because of, the 1908 panic. As an aside, J.P. Morgan was called upon by the U.S. government to come in and kind of be like the lender of last resort.
Back in 1908.
Back in 1908. And so, people realized you couldn't have a thriving economy that was susceptible to bank runs and also susceptible to trying to, to always having to be bailed out by the super rich.
Right.
There needed to be a better system. So some bankers and senators and, other leaders at the time got together in 1913 in a place called Jekyll Island, and they created the central bank. The founders were always resistant to the idea of central banking. The founders, of America, the founders of our democracy, because they realized they were prescient. They realized that central banking consolidated power, and that could be dangerous.
They believed in decentralization.
They believed in decentralization.
The way that we
Decentralized
do.
democracy, just
Right.
like we do. Amazing, right?
Right.
And so what they did at the time in 1913 to keep with the founders' philosophy is they decentralized as best they could the central banking system by having 12 member banks around the United States with equal power, effectively reporting to a commissioner and a central bank board.
Okay.
And that's the same system that we have today. And that created standards and rules for the American banking system to abide to. It created a facility where they can backstop and support the banks if they needed liquidity. And it also gave them the mandates to set the policy, the monetary policy that governs the U.S. dollar, which is what we talked about in that last video that you just shot. Is that right?
Yeah. And so is that mandate still as relevant today as it was back in 1908 or 1913? Can you imagine a world where Bitcoin is the standard and we don't need a central bank?
People talk about that all the time. I don't know what the future looks like. I always see a place for the U.S. dollar and for central banking because there's an incredible amount of trust that's in it, and there's an incredible amount of built-in value sets in the U.S. dollar. Who knows what will happen in the future?
It sounds like branding. Like the U.S. dollar is a really strong brand.
Absolutely. And it's known, exactly. And it's the easiest way to transact. Cash is still the easiest way to transact. And that's really what drives the brand is you can get U.S. dollars anywhere in the world, and people generally accept U.S. dollars. It's accepted as for commerce globally.
Yep.
It's not the easiest to use across borders like Bitcoin is, but it's very well recognized. It's very well accepted, so it makes up for it in other ways.
So those are the benefits of central banking. What are the problems with central banking besides just the really obvious one of extreme centralization of power?
So one of the problems is because they're setting the monetary policy, they need to make decisions. And they're a small board, and they're making decisions based on a lot of data that they're collecting from the member banks. They're just ultimately, any decision that a small group of people is making is going to have ripple effects. And it's even if it's meant to be fair, unfortunately, it's always going to favor some people over others. And, we
Well,
could
the
shoot
system's hierarchical, right? So you have people who are making decisions, and then you have people who are in proximity to people who are making decisions.
Exactly.
And you can't control those layers of proximity.
You have kind of like concentric circles
Right.
of access to capital from the central bank, and the banking system is right there, really close to it. And there's two problems with that. Number one is, if the central bank's policy is to give money directly to the people by easing or other techniques to provide liquidity into the economy, they have to go through the banks. The banks are making decisions on who to lend to and who not to based on a number of factors, including creditworthiness and others. So ultimately, whatever the goal is of the central bank isn't, it hits a kind of intermediate step there where, it's getting skewed to some degree. The second problem, and there's many problems, but the second problem is they're setting the interest rates and they're making decisions based on the data they're getting, but they can never account for all the externalities of those decisions. Because ultimately,
Are you talking about unintended consequences?
Yeah, absolutely. Yeah. A simple example of this is, I worked for a company before. When I had some budget, what would I do with that money? I would figure out ways to make our operations more efficient. By making our operations more efficient, we are able to lower the cost of the services that we're providing. By lowering the cost of the services we're providing, we're having a deflationary impact on the economy. And what that's doing, what that money is doing, it's being used to have a deflationary impact on the economy. And some businesses will take that cheap money and automate people out of work, right? So they're putting people on the unemployment rolls, and also, providing, a deflationary impact, or making a deflationary impact on the economy. And that deflationary impact is fighting an inflationary impact by the money being printed.
Right.
And Jeff Booth talks about this all the time. He's the author of a book called The Price of Tomorrow. And it's kind of like two tectonic plates that are rubbing up against each other. More cheap money from the Federal Reserve, going to businesses and corporations to automate and become more and more effective in providing a service, lowering the cost of those services. But what's also happening with all that cheap money that's coming from the Federal Reserve? It's creating, a debasement of the currency.
Right.
So the people that are holding that money are losing their value. And but the people that have assets are seeing asset inflation, and they're seeing the values go up in terms of real dollar terms, and it just creates more. What I'm getting to is it creates more and more wealth inequality.
So how does Bitcoin factor into that?
It puts the decision-making power into the people that hold it, and those people. So when you have Bitcoin and you have destiny and determination, you're able to make the right decisions on where to invest that Bitcoin. If you want to invest in a business, and you're more deterministic over what that money is going to be doing over time, because we can interrogate the blockchain, we can understand the monetary policy, we can understand the deflationary impact of it through the supply curve. It's decentralizing the destiny of the money.
So central banking monetary policy is inherently top-down, right?
Yes.
It's decisions made from the top, by the top, and then it has to trickle down to everybody else.
Correct.
And Bitcoin is bottom up. I mean, bottom sounds not
distributed.
Great, but yes, right. So Bitcoin empowers the network instead of empowering an entity that is empowered over the network.
Yeah, absolutely. And because it has a limited supply, the capital that goes into it would create a higher value on a network, and the capital that comes out of it creates a lower value on a network. So one way of thinking about it, it's kind of like a real world bank that's open to anyone. It's open to governments, institutions, regular people. It doesn't discriminate. And you put value into it, you take value out when you want it. And you can move value around in it. And it's distributing basically the financial and economic activities in a way where that the determination of those activities cannot be manipulated in any way.
Can that have a measurable, noticeable impact on the whole economy, or are we talking about mostly just individual people's self-determination as they go through their lives? Can Bitcoin actually affect this giant central banking system that we all use?
I don't know. I think there's kind of like, I see it as like two different ecosystems. I hold both U.S. dollars and Bitcoin, right? So when I'm participating in U.S. dollars, I know that money is going to be debased over time. I know everything about it. I know what's going to happen. So I'm limiting my exposure to that. My other investments I'm allocating to where I can, do well over a range of possibilities and limit my risk over another range of possibilities. No one could tell the future.
Yeah.
I don't know. I have some views of what kind of like a Bitcoin standard can look like where, economic activity is based on actually true value that comes from the people versus, created value that comes from a central bank. But it's it's a crystal ball kind of speculation of how it would actually work in the future. So I think it's a matter of ecosystems and, exposure to ecosystems. And the beautiful thing is that people are able to, make their own decisions as to how much they want to allocate into these various different, ecosystems.
So it's not an either or proposition. Bitcoin is added value into the economy. It's not meant to overthrow or replace it. Is that correct?
Overthrow, replace?
Well, because, there is so much revolutionary language associated with Bitcoin, and it can be a little bit intimidating because we have a system in place that, for all of its faults, does a job. And that we need. You can't just get rid of the central banking system and be okay with an economy of our size.
I don't see how the central banking system goes away if they make, really fair and smart decisions for the most amount of people. And what I mean by that is we've been under this regime of really low interest rates for a long time, and money is incredibly cheap, and money is finding their way into assets, and those assets are becoming inflated and becoming more out of reach for the poorest Americans, poorest people in the world. That could be reversed if interest rates were raised. But the problem with that is that it would probably destroy the economy. So they're stuck in between a rock and a hard place. We don't know if Bitcoin automatically becomes adopted and we're on a Bitcoin standard. There would have to be a new set of operating principles that we're all working under, and we don't really know. That's never happened before, so we don't know how that's going to kind of transpire.
But these systems can and do coexist.
Sure, absolutely. Yeah. And that's what I foresee happening, at least for for the foreseeable future. I don't see any reason why there would be any kind of instability in the U.S. dollar long term to a point where it would go away or be shattered. I certainly don't think Bitcoin would be the cause of that. I think it would have happened anyway, regardless of whether Bitcoin existed or not. Before Bitcoin was gold, and that was the store of value, and people would have probably have just bought gold and used that as a store of value. It's great properties,
they
physical.
Still do.
And they still are.
I mean, gold, the original gold, the OG gold, is still around and being used as gold.
Absolutely. If you look at the charts, it doesn't look too good.
Does it not?
It doesn't look too good, which is surprising because you would think that would be very popular.
So my investments that I'm wearing right now are worthless.
I'm sorry to hear that. I'm sorry to tell you that.
Is
Not
that really
worthless.
true?
No, not worthless. It has value.
I've invested heavily into just little pieces of gold.
Well, if you look at, so at one point Bitcoin had a $1 trillion, just very recently, a $1 trillion market cap. Gold's market cap was 10 trillion. It went in a very short period of time from 200 billion. I'm talking about Bitcoin. Went from 200 billion to 1 trillion. That's $800 billion of value.
Yeah.
If we had seen that $800 billion of value go into gold instead, you would have seen an incredible amount of asset appreciation on gold.
But we have not seen that.
We haven't seen it because I think people are, understanding the value and the benefits of adopting Bitcoin as a superior hedge against inflation.
So what does Bitcoin mean to the people who hold it? Why does Bitcoin mean certainty to people who have invested in it?
I think that's the beautiful thing, is that Bitcoin can mean anything to anyone. It's really a tool that can be used. It's like a Swiss Army knife. So it could be used in a variety of ways, depending on who you are, depending on, a business is going to use Bitcoin differently than a person, differently than a bank, differently from a government. In El Salvador, they just called it legal tender. And it went through their parliament. And
that's a huge deal.
Yeah, and the people are using a Lightning Network down there for transactions primarily. So it's really a financial system that it doesn't have its own set of values. It just people prescribe the values onto it. I think that's a beautiful thing. I don't think there's not many things that really provide that level of optionality. in the financial world. Commodities are commodities, bonds are bonds. They perform a certain way. They are governed a certain way. Stocks are governed a certain way. And I think Bitcoin is very unique in that way, where you can look at it as risky, you can look at it as not risky.
Right.
You can put value into it, you can take value out. You can collateralize it and take loans off of it. It's a store of value, it's a property, it's a commodity, it's all these things. And I think that's one of the most fascinating things about Bitcoin as well.
So if we take, this is the final question, if we take El Salvador as an example, they just made Bitcoin legal tender, and that was a whole centralized process for them. They had to go through the government. How does that work with their central banking system? Because that seems to me like those two systems are being sort of superimposed on one another. And I'm curious how that real life use case is actually playing out between those two systems.
So El Salvador's currency is pegged to the US dollar. So they don't have to make decisions. They don't have, their central bank is really our central bank.
Okay.
Yeah. So then you ask yourself the question, why did they go legal tender? They want their own self-determination, or they want a different, a different kind of, value set for their currency. The thing about El Salvador and a lot of Central American countries is that they historically, if it wasn't capitalism, it was Marxism. Right? There's this long history of wars and fights between corporations and these indigenous movements that would rise up. It's going all the way back to the 30s, 40s, especially in the 50s. So they now have a third option, that's Bitcoin.
Right.
And so if you listen to the president of El Salvador, what he's saying is, he's taking a big risk here, but he is saying a lot of kind of same things that I'm saying, is that it's a risk managed bet because of all the properties of Bitcoin and what the future could hold for Bitcoin and the freedom that it gives to the people of El Salvador. So all together, he's very very confident about this approach of using Bitcoin as legal tender.
But that hasn't replaced their central banking system. That's in addition to their central banking system. They now have a decentralized Bitcoin system.
Correct. So they can use their native currency, they can use US dollars, and now they could use Bitcoin.
And what is the effect that is currently having on their economy?
It's still very early, so they just adopted this.
Or what's the projected effect?
The projected effect, it's going to be, it depends on how the people really start to use it. Are they going to use it just solely for transactions? Are they going to start to, store their value in it? Are they going, it all depends on what, like I said, it's a Swiss Army knife. It really all depends on what their particular needs are. So we have to watch it and see. If I could guess,
right,
they're going to start using it for everything. They're going to start using it to, transfer value. So they're going to use it for merchant services. They're going to buy, going to the store and buying a coffee, and they're going to pay over Lightning. It's going to be instant. It's going to be nearly free. But they're also going to denominate themselves in Bitcoin and use it as a store of value and have savings and have the faith that savings is not going to be taken away from them over time through debasement. It's going to be a process for them. It's going to be a process of education, understanding, seeing the benefits of it, or maybe not seeing the benefits of it. It could go the other way too. We don't know. It could be a failed project. So it's going to be really exciting to see how it transpires.
So what does this mean for the rest of us watching El Salvador play out? What does it mean for those of us who are watching Bitcoin?
Well, if we look at other Latin American countries, they're trending towards adopting Bitcoin in the same kind of manner. So I think that's interesting. I think it kind of validates something that I've certainly been saying, is that Bitcoin is an alternative banking system for those that don't have access to traditional banking, which are many people around the world. So it's nice to see that that's validated. And we'll have to see if they're getting a benefit from it and what those benefits are. People adopt technology if it helps them.
Right.
And Bitcoin solves a clear problem. So to see that validation, everything's kind of trending in the direction that, it is solving a problem. The people of El Salvador are validating that it solves a problem. And now, the rubber hits the road. How are they going to use it? How are they going to benefit from it? What are the stories that they're going to be able to tell about it? And are other people around the world going to look at them and say, they made a wise decision, or, we don't want to take that risk and we're not going to go that route.
And this was obviously like a heavily considered decision, right? Like the country of El Salvador would not have entered into this lightly. And also it must have taken so much energy and resources for them to even get this thing done.
Absolutely.
Legally.
Absolutely. And a lot of work by the Bitcoin community that went to El Salvador. There's an organization called Bitcoin Beach that went to El Salvador, and they helped people in El Salvador that were unbanked, which is, I believe the president said 70% of El Salvadorians are unbanked.
No.
And a lot of them, we depend on remittances that come from
overseas or whatever.
Overseas, and remittances take a significant amount of, the money that's being transferred. So Bitcoin is an alternative to that, because you can send Bitcoin as a remittance, and all the value goes directly to the person that you're sending it to.
I literally don't see a single problem.
So yeah, I mean, it's I think it just comes down to education, and understanding it, and that's a process that the El Salvadorans have gone through, and they made a decision on their own, and I think that's great. And I think it was also interesting to see how the World Bank and the IMF responded to that. They responded in kind of a weirdly, antagonistic kind of way.
But that's to be expected, no? This seems like a very meta kind of thing to be happening right now, that we're actually seeing the communities interact with each other. Centralized banking as an institution, and then the Bitcoin decentralized network, which, although is decentralized, has a pretty clear voice.
Absolutely. It reminds me of the days when, I'm a kind of an old school technologist, when Microsoft was a standard and then Linux came out, and people that downloaded Linux and tried it and saw the benefits of using it for their, enterprise production systems, and how easy it was to maintain, and how much flexibility it gave them, and self-determination it gave them, because now you weren't necessarily, constricted to the Microsoft roadmap, or, having to work with Microsoft. It opened up new opportunities, and we wouldn't have what we have today if it wasn't for Linux.
And it's a really good analogy, too, because Microsoft is still around.
Absolutely. And in those days when Linux was just coming out, right, if you asked a question, what would the world look like, nobody could tell. But now you can see pretty much every device runs some, distribution of Linux, and we wouldn't have, all the technology that we had, the proliferation of Internet of Things, if it wasn't for Unix and Linux, these open source platforms.
So we're watching the Bitcoin version of the Linux revolution.
Exactly.
happening right now.
It's an open source, Bitcoin is open source money.
Isn't that wild? Yeah. Well, okay, I'm going to wrap it up here. Thank you so much. This was an awesome discussion. I know we talked about a lot of stuff, but that's kind of the point of these in-depth videos, is to just really get into the topic. I think it's so fascinating. I'm sure we'll come back to this topic as we see all this stuff play out. It's just like endless video content.
And a lot of fun.
Yeah, this was great. Thank you so much. And thank you for watching this video to the end. If you enjoyed it, please give us a thumbs up. Let us know your thoughts, comments, questions, observations in the comments, please. We would love to hear from you. Subscribe to our channel if you're not subscribed. Hit the notification bell so that you are notified with all of our new content instantly. And stay tuned. We will see you in the next video.